Good morning, everybody. This is the live market open for May 5th. It's Wednesday, as usual. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As always, we'll cover recent developments in markets. Then we'll have our technical segment covering resistance and support levels, talk about the charts, discuss the upcoming events. Specifically, our focus today is on the Bank of England's Super Thursday, an event we'll also cover live, and you're welcome to join tomorrow. Our currency of the week is dollar CAD, given everything that's going on with oil, but it's not only oil. And as usual, we'll discuss the week ahead and wrap up the show. And as always, your questions are more than welcome. If you cannot see the chat box alongside the screen, please go to the address here at tlk.io/fxrate-forex-live-video. Okay, so news from tonight. U.S. President Donald Trump fired the FBI Chief Comey, James Comey. We are seeing a limited Forex move, a bit weakening of the US dollar. I wrote here no FX move, but it's not fully correct. We are seeing a weakening of the US dollar, so let's talk about this just a bit. So, as you know, the director of the FBI, James Comey, has been quite an outspoken person. He's been involved in the Clinton investigations back in July, then again in October. He did have an effect on the elections by reopening the Clinton investigation. And now Trump is elected and he's investigating Trump. His organization is investigating Trump. Trump said it's related to those Clinton affairs. And now it seems that, well, he's trying to hide something about Russia because there is a grand jury doing an inquiry. Why am I telling you all this? Because it does have a bit of an impact on the US dollar. Now, what we have seen in recent days is a stronger US dollar. And I think this firing of Comey, this is a huge political event. We can explain it. We can explain why it weakens the dollar. We can say, okay, if now the administration is focused on this Russia affair on Comey, then it has less time to promote healthcare, which is a prerequisite for promoting tax cuts, which markets really care about, not Russia and not healthcare, okay? So that could be a reason why the dollar is weaker. But it also seems like an excuse because the dollar was just rallying without reason. We'll talk about the NFP soon. And sort of we had an excuse for profit taking. It's the same when we see markets are sort of tense or going in one direction, and then an economic figure is released. There's no surprise in that economic figure, but it serves as an excuse, as a trigger for a reversal of the previous move. Okay, so good morning, Ed. Good morning, Ramon. Let's go back to other events. That's just the sort of latest news. In France, we had, as expected, Emmanuel Macron was elected as the next French president. We had a buy the rumor, sell the fact. We'll look at the chart soon. A false break of euro dollar to 110.20 before it retreated all the way. Mixed non-farm payrolls, weak wages, strong job gains. And late last week, Republicans did pass Trump Care in the House by a very narrow margin, and the Senate will basically rewrite it. But this is maybe what another reason for the dollar to rise about. Even though everybody knows the current bill will not hold, oil prices are eyed for further falls. We did have a collapse. It was actually 1 week ago, just after the show. Oil prices collapsed all the way under $44. We'll focus on that a bit more in the segment about dollar CAD. And they have recovered a bit, but didn't recapture the triple bottom. And after the French elections, UK elections now take center stage. Okay, a bit more about the NFP. So 211,000 jobs gained, quite a beat on expectations. Well, small beat, at least it was under 200,000. At least it's good news. But wages, they did rise 0.3% month over month, exactly as expected. But we had downward revisions. And after we already had wage growth rising to 2.7, we're back to 2.5. Basically, in the past year, wage growth has been very stable. And why am I talking about wage growth? Why is that important? We talked about that last week. Because if the US economy is at full employment, then employees find it harder to find employees, and then they begin raising rates, okay? Raising wages, raising salaries. And well, you can look at the unemployment rate, which did fall to 4.4%, but the participation is down. Still too much slack in the US economy. Things are improving, more people are finding jobs, but it's not, the economy is not overheating, it's not bubbling. There's still a long way to go. Okay, I have my doubts about the June rate hike, even though markets price it in. Other data, well, we had data leading up to the NFP. It was mostly as expected, with the ADP and ISM non-manufacturing PMI beat expectations, showing good activity in the services sector, but the employment component was weak. Jobs claims were okay. Again, job gains were good. We've seen that also with the jobs figure. Labor costs are up, but that is quite a volatile figure. Outside the United States of America, in the UK also, optimism about the services sector. The biggest one is 79% of the UK is in services, the UK economy. Canadian job gains, they missed expectations for a change, only 3.2, and that weighs on the Canadian dollar. In China, we had trade balance beating expectations. Inflation was a bit more mixed. And the Australian retail sales missed with 0.1. We're seeing the Australian dollar under some pressure. At least in recent days, now we're seeing it recover because of the weakness of the greenback. Okay, enough talk about news. Let's look at the charts. So this is our technical segment for major pairs for the second week of May. So let's jump to euro dollar, the world's most popular currency pair. So here we are at currently 108.95. We had a move to the upside. We had a small weekend gap that was mostly priced in. The victory for Macron. We did reach 110.20, false break all the way back down. Then a US dollar rally and fund support 108.70. Resistance 109.50, the post first round high, and then 110 and 110.50. On the downside, we have 108.70, 108.20, and 107.75. To see why I have this blue background, the purple background, is because of this uptrend channel. Since the beginning of the year, euro dollar has been trading to the upside. So maybe it was basically rejected from further moves by this downfall. To me, it still seems like a correction. The gap that followed the first round of the French elections was never closed. So I think the trend remains to the upside on euro dollar. Pound dollar, here in the daily chart, moving a bit to the upside. We have resistance there at 129.80, which was the high seen a few days ago. And of course, then it's followed by 130 and 130.50. So a bit of a hesitation there ahead of the UK elections. Support 129, 127, and then 125.60. We had a big jump, and then I think the pair is looking for a new direction. The recent rise is mostly related to the weakness of the US dollar. Dollar yen, this pair certainly reflects the strength of the US dollar. So now we have a retreat from the high level. 114.30, the recent peak, is immediate resistance. Further resistance 115 and 115.50, and then we have a big gap all the way to 117.50 and 118.70. To the downside, we have 113.60, 113, 112.20, and 111.60, which used to be a double bottom. But the trend remains to the upside. Look at this amazing recovery over 600 pips from the lows. Okay, dollar CAD. Okay, here we reached a peak of sorts. We had a big downfall in the Canadian dollar, big rise in dollar CAD. We're currently at 137.16. We reached 137.90, our new line of resistance. The next line is only at 140, the very round number. Just before 137.90, we have weaker resistance 137.55, and then support 136.40 and 136, 135.35. Aussie dollar, quite a downfall. Remember, not only oil is crashing, but also iron ore. And the figures there weren't so good. And anyway, In any case, if we look at the charts, currently 73.66, a clear breakdown there of support at 74.40, which gave quite a fight, but eventually collapsed. The new low is 73.25. Well, we had the previous support line of 73.10, and further support 72.50 and 71.60. Resistance above 74.40 is at 75, and then 75.60, and the veteran line of 76.10. Kiwi dollar, well, following its peer commodity currencies, even though we have some stabilization over there. Currently just above 69, 68.80 is support, 68.40 further support. The pair couldn't fall below these levels. Resistance 69.70, and above the 70 level we have 70.40 and 70.90. And dollar Swiss, also here we see a good reflection and expression of the strength of the US dollar. So 100.50 and 101.60 are the levels to the upside. To the downside, we have parity, worth mentioning, not only a round number, but also used to work as support. Further support 99.60 and 98.60 are notable levels. It's possible that the Swiss franc got a push to the downside also by the Swiss National Bank, but it could be the result of the French elections, less demand for safe haven franc. Okay, so that concludes our major pairs for the second week of May. And now let's talk about the crosses. Again, for the second week of May, lines of support and resistance. Well, here we are at with Euro Swiss, big upside gap that was seen, well, in other Euro pairs because of the French elections, and then we continued higher on the second round of the elections. Currently 109.60, a level last seen well, back in October. Resistance there at 109.80, very close to the 110 level. Support at 109.25, further support 108.75, and further below 107.80. If we zoom out a bit, we can find levels, well, last seen last year, 110.15 and 110.60 are on the upside. The Brexit pair, Euro Pound, here we see a close of the gap, or almost, yeah. The gap following the first round of the French elections. So the pound has been quite strong and the euro had a sell-off. So we're at just under 84, support 83.30, 83 and 82.20, resistance 84.80, 85.30, and 85.73. So tighter ranges. In any case, the move to the upside stalled over there. Decidedly mixed, as some say. Euro yen here, the weakness of the yen is just overwhelming. We did see it stall a bit, but anyway, currently 124.20, resistance 124.50, 125, support 123, and 121.30. And pound yen, well, here the upside is clear, just under 148 at the moment. 148.50 is resistance. That was the peak back in November. And if we cross this line, we'll be at the highest levels since the big crash of Brexit. Okay, it's the highest in almost a year. Further support is at 146.80 and 144.40. And oil prices, here we are. Big fall. We dropped under this triple bottom at 47, reached a new low. I would see it at this point as a false break at 43.60. Bounced back quite quickly to 46. The 46 handle, currently 46.20. 47 remains very strong resistance. Switches its rolls, followed by 49.50, support 44.50, and 42 if we have further deterioration. All right, so that concludes our technical segment for crosses and the price of WTI crude oil. Let's continue discussing the upcoming events this week. So far we had a relatively light week in terms of economic indicators, but we did have, of course, political action from France and now from America. But we do have significant events today. We have Mario Draghi talking later today. The president of the ECB will face the Dutch parliament. He'll be testifying or giving some insights. He might talk about monetary policy. Let's see if he pushes the euro up by expressing optimism now after the elections, or being dovish Draghi, he might try to keep the euro relaxed at ease. We have oil inventories becoming more important after the recent crash in oil prices, and rate decision from New Zealand. For those of you trading the Kiwi, no changes expected. Rates are expected to remain at 175. And well, data has been okay in New Zealand. Inflation a bit weaker, but employment looks strong. So probably nothing significant from New Zealand. Tomorrow, busy day. We have industrial output and trade balance from the UK. Let's see if, well, now that the pound is at crossroads, let's see if it makes a difference. Fresh economic forecasts from the EU, from the European Commission, to be exact. And maybe they'll upgrade growth forecasts so the data looks better. Bill Dudley of the New York Fed, usually a dove, but when he goes a bit hawkish, the dollar rises. He'll be speaking later tomorrow. That should be interesting. And the big event for tomorrow is the rate decision, Super Thursday, with the meeting minutes from the Bank of England, the rate decision, and the quarterly inflation report. What makes it super? Then PPI, producer prices from the United States. It's sort of a warm up towards the CPI, and I have a mistake here on the slide. And jobless claims. Retail sales come on Friday. That's the big event of the week in terms of indicators. We also have German GDP. Last time, German GDP came out a bit weaker than expected, and it pushed a bit, well, overall GDP lower. This time it's expected to rise at 0.6. Important event for the euro. Retail sales in the United States at 12:30, accompanied by CPI. Retail sales is the US economy, if we put it simply. The American consumer is important for all the world, and we also have inflation figures. And last but not least, consumer sentiment for the month of May. Let's see if consumers remain optimistic, something that implies, in theory, stronger retail sales in May. However, it's always important to remember the correlation between retail sales and sentiment is not always that clear. Consumers may show confidence but not buy. Okay, so we have a strong end to the week. The Bank of England tomorrow is the main event, and then a focus on the US consumer on Friday. But also today, events worth mentioning. Let's see if Draghi surprises us. And now to our preview of the Bank of England. It's the big event of the week. Mark Carney and his colleagues will lay it out 1 month ahead of the elections. So again, it's a super Thursday. What makes it super is the quarterly inflation report, a more detailed outlook, similar to the ECB's quarterly meeting when it has new forecasts, or the Fed's meeting when it has new forecasts and the press conference. This is sort of a more important meeting by the central bank in the UK. And it's dubbed Super Thursday. The meeting minutes as well are released there as well. The Bank of England has a few dilemmas. On one hand, the weaker pound pushes inflation higher. It reached 2.3% at its peak. That's, of course, the result of Brexit, and the unemployment rate is low, only 4.7%. So the UK economy is doing well. Inflation is rising. The Bank of England should raise rates. We indeed had one member, Christine Forbes, who voted for a rate hike last rate decision. Sorry, that was back in April. On the other hand, wages are stuck. So they're also at 2.3%. That means that standards of living are flat because prices are rising at the same pace as wages are rising. So basically, there's no improvement. Brexit is yet to bite. We've seen that growth slowed down significantly in Q1, 0.3% quarter over quarter, after 0.6, 0.7 after the Brexit vote, after the Euro referendum. So it's beginning to bite. So, like every other central bank, the Bank of England is likely given this dilemma not to do anything, to sit on its hands and stay away from the spotlight. Elections are coming in exactly 4 weeks after the decision by the Bank of England on June 8th. They want to stay out of the spotlight. They were criticized quite heavily for their immediate action after Brexit, cutting interest rates, adding more QE, and for their forecasts before Brexit, talking about the danger to the UK economy, something that so far did not materialize. So they'll prefer, like many other central banks, to stay out of the spotlight. What will Mark Carney or the Bank of England do to the British pound? So the recent rise in the pound from around region of 120 to 125 to now just under 130 is welcomed by the Bank of England. Okay, contrary to many other central banks, they want a slightly stronger currency at the moment. The pound just fell too much, okay, and it pushed inflation of imported goods, especially, too high. But Carney and his colleagues here would not like to see the pre-Brexit levels. They would not like to see 145, 150, 155. They would like it around 130. So again, not rocking the boat remains the main message. So what should we watch out for? The immediate impact will come from the vote. Last time we had one member voting for a hike, and this time we're expecting a unanimous vote. Okay, so less pressure for a rate hike. There are 9 members in the Monetary Policy Committee, MPC. A second move for the pound will come from the tone about the economy, mostly from the quarterly inflation report, less so from the meeting minutes. So my baseline scenario is that they'll keep everything balanced. That's the high probability scenario, expecting inflation to moderate and Q1, looking at the Q1 growth drop to be a bit temporary. Everything is okay. Still, of course, cautious, still ready to act, but nothing really significant. Nothing to see here move along. The second scenario is here, Mark Carney biting his fingernails, a bit worried. And they'll be talking about the erosion of wages, how salaries in the UK are not growing, the British consumer suffering. That the weaker growth vindicates the Bank of England's forecast. Maybe they'll tap themselves on the back for finally getting their forecasts, the gloomy forecast, right. They might expect more weakness to come along. And again, no votes for hike and the pound falls. This has a lower probability, but you never know. Maybe they don't like the recent strength of the pound, and maybe they'll want to defend themselves politically. And of course, there's always the optimistic scenario. They would not like to upset the UK government ahead of the elections. Here are Prime Minister Theresa May and Mark Carney. Still one vote for a hike. Still some level of optimism. Optimism about growth, optimism about inflation, and the pound will rise. This has a lower probability. I don't expect it to materialize, but always we should look out for that. Okay, so to conclude our Bank of England preview, a lot of information at once. The vote impact can be reversed. So first of all, we'll get data about who voted, how many people voted for rate hike, probably none. Then we'll have the other stuff coming out, the meeting minutes less important than the quarterly inflation report, which is a more detailed document. They're unlikely to rock the boat. The higher pound now is likely to balance things out. A bit of a lower inflation, less erosion of wages, and not too damaging for growth. Watch about comments about the weaker growth, the path of inflation. They have this fan chart. And so with the Bank of England not telling us too much, perhaps we should look out for the data coming out next week. Next week, we have retail sales, inflation, and the jobs report, all also critical for politics, because these are top-tier figures, the last of this kind before the UK elections. Okay, so before we move on to the Canadian dollar, Any questions about the Bank of England? Okay. So this is our currency of the week, dollar CAD. Of course, oil prices first and foremost. Big rise in dollar CAD, big fall in oil. So this is the main reason. Blame oil. WTI dipped under 44, Brent under 50, and the Western Canadian Select even lower. In any case, bad news for oil, bad news for the Canadian dollar. We had their triple bottom at 47, and it's gone. But it's not the only reason. Here are Prime Minister Justin Trudeau of Canada and US President Donald Trump. Had a good start to the relationship, but then, just as Trump reached his 100-day mark, he began talking about how Canadian politicians are outsmarting American ones on trade on timber, lumber, softwood, dairy products, talking about Wisconsin dairy. Anyway, for Trump, it seemed like a one-off around the 100-day mark, but Trudeau did mention how in other cases the United States has a trade surplus with Canada. Anyway, all this noise, which now has quieted down, seemed to have hurt the Canadian dollar as well. Remember, the United States is just 10 times the population. It's the bigger country, has a lot more impact. But also weak employment for a change. After a few good months in Canada, job growth was weak, only 3,200. And other figures also remain mediocre. Inflation is slowing down. Retail sales are not going anywhere fast. So the Canadian economy is just okay, just about managing, not more than that. And the recent worry came from housing. Okay, so Ontario, the province of Ontario, as far as I know, the biggest in Canada, followed British Columbia with new restrictions on housing. They want to cool down prices in Toronto, similar to the provincial government of British Columbia wanting to cool down prices in Vancouver. And we had one firm with significant trouble in Canada. There are worries that this bubble, some see it as a bubble, the house price rises, that it could burst. Dollar CAD, I think it has more room to the upside. Oil, of course, plays a significant role, but watch out also for inflation and retail sales that we have next week. Watch for economic data in general. I think it isn't over. We almost touched 138, and I think we have more because of the weakness in oil, but not only oil. The Canadian economy is not doing that well. Let's look at the chart to conclude our currency of the week. So we're here at the chart of WTI crude oil. Let's mention also the levels here once again. 44.50, 42. To the downside, to the upside, we have 47 and 49.50. And on dollar CAD, more specifically, currently at 137.20. Resistance 137.60, 137.90, and further high. Well, we can go to the levels last seen back in January 2016, not that long ago. So 140 followed by 143.25 and 147, which is way above current levels. To the downside, we have 136.40, 136, and 135.40. Okay. So this is our currency of the week, dollar CAD. And now let's preview the next week, the week of May 12th to May 16th. So on Monday, another week begins with China. Chinese industrial output begins the week, important for the Australian dollar, but also a gauge of the global economy. On Tuesday, we have the UK inflation report. Lots of UK figures. The first one on Tuesday with the inflation. Eurozone GDP. Now an updated, it'll be an updated figure after the German GDP comes out. But Germany doesn't stay away from the headlines. We have the German ZU sentiment, an early indicator of sentiment in Germany, the biggest economy, in the Eurozone. Also on Tuesday, we have some housing figures from the United States, building permits and housing starts. They're important for the wider US economy, but they tend to offset each other, one beating expectations, the other missing them. So they both need to go in the same direction in order to see a significant impact. On Wednesday, another day, another important UK figure, the jobs report. Watch out for wages, not only the change in jobs, not only the unemployment rate. Let's see if wages recover from the recent slump. We have final CPI in the Eurozone. Nothing is expected to change, but we sometimes have surprises. Last time, the initial figures for April came out better than expected. And oil inventories, given everything we talked about regarding the Canadian dollar, every release of oil now has become a bit more important. On Thursday, we have the preliminary GDP from Japan. And we had a full year without contraction in Japan. 2016 saw only growth. This time, another quarter of growth is expected, but contraction is not rare in Japan. We have the Australian jobs report for those who are trading the Aussie. Will it help the Australian dollar recover from the recent slump? We'll know that in a week from now. We have the UK retail sales, again, the third important release from Britain. And we also have jobless claims and the Philly Fed from the United States. And on Friday, relatively quiet end to next week. Well, busy end for Canada, because we have CPI and retail sales, top tier figures from Canada, but not we don't have the top tier US figures, and we have Eurozone consumer sentiment. So again, not such a busy week. We do have, but it is an important week for the UK, and we do have other a mix of figures basically from all over the world next week. Okay, any questions? Let's take another look at the charts. The Comey effect. Well, we are seeing a weaker dollar. Oh, here we are with the pound dollar getting closer to 130. All right. This is, by the way, the odds for rate hike in June. Let's refresh it to see how markets are pricing in. Bond markets are pricing in the rate hike in June. It's been as you can see, they are pricing in 83% chance of a rate hike in June. I think it's a bit exaggerated, especially given the weak wages. In any case, we have lots of data until then, GDP and other figures. And other non-farm payrolls, of course. Okay, time to wrap up the show. So this is the wrap up for the live market open for May 10th. The biggest piece of news in global markets in the world is that US President Donald Trump fired FBI Chief James Comey. The FX moves were a bit limited, but still we see a weaker US dollar. I see it more, this event, as an excuse to sell the dollar to take profits after the big rises. The previous big political event of the week was that Emmanuel Macron was elected president of the French Republic by a wide margin, wider than the polls had expected, 66% to 34%. This is, of course, good news for markets, as he's a centrist, pro-market, pro-Europe. He had the EU flags in his rallies, and Marine Le Pen, the extremist, was defeated. It's still a messy picture in France, of course, but because he still has to win the parliamentary elections, and he still has to implement reforms. But at least the worst is behind us. Non-farm payrolls were quite mixed. I see them as weak for the Fed, lower participation, and more importantly, weaker wages. I think it outweighs the gain in jobs. And I think we still haven't seen the full impact from that. The Republicans did pass Trumpcare in the House, but everybody's sure it'll be changed in the Senate, and there will be a lot of back and forth. In any case, tax cuts are not in the agenda at the moment. Maybe later in the summer they'll gain their significance. And well, oil prices, we talked about that a lot today, the Canadian dollar. And UK elections will now take center stage. 4 weeks to go until the elections over there. Let's look at the charts in this wrap-up. Euro dollar recovering from the lows, 108.70 is support, 108.20 further support, resistance, 109.50 and 110. Pound dollar, of course, eyeing the 130 level. We have the previous high there, 129.90 as immediate resistance, support at 129. The yen, dollar yen, reached a new high, 114.30. Immediate resistance, immediate support at 113.60. Dollar CAD, now off the highs. We're at, well, just about 137. 137.90 critical resistance, support, important support at 136.35. And the Aussie dollar, 73.60, significantly lower than it used to be. 73.25 support, 73.75 resistance. Okay, so that's our show for today. We have less upcoming events, but certainly political news and economic data to move markets. So thank you very much, everybody, for coming and for the kind words. Yeah, so join us for the Bank of England's rate decision tomorrow. It's at the decision itself is at 11 GMT. Not sure when the coverage begins. Anyway, it's a super Thursday. Might be a bit less super because of the UK elections, but that's a big event tomorrow. And then we have a focus on the US consumer on Friday, retail sales and inflation at the same time, and then consumer sentiment to end the week. I'm sure this Trump-Comey drama will continue. Let's see if it has a bigger impact or perhaps no impact. So far, there's been a limited impact against the US dollar. Okay, so that's it for today. Wish everybody success in markets. And see you, if not tomorrow, the next Wednesday, same time, 7 GMT. So that's it. Thank you and bye-bye.